Welcome to our deep dive on clearing up Roth IRA excess contributions for high earners. In this video, we will explain how exceeding Roth income limits becomes a costly mistake if not handled precisely, why a standard withdrawal is not enough, how to correctly request a return of excess contribution, and how to deal with residual earnings and 1099-R reporting. We will also discuss why you should keep the account open and how to plan a backdoor Roth IRA strategy. Let's begin. First, we will outline why excess Roth IRA contributions happen. Next, we will contrast a return of excess contribution with a standard withdrawal. Then, we will cover how to handle earnings and 1099-R reporting. After that, we will provide a step-by-step cleanup guide, followed by deadlines, codes, and penalties. Subsequently, we will map out the backdoor Roth strategy for high earners. Finally, we will test your knowledge with a quick quiz and wrap up with key takeaways. To set the stage, exceeding the Roth IRA income threshold is a frequent and high-stakes error. Although many people think a standard withdrawal solves the issue, the IRS requires that you specifically request a return of excess contribution. Without this, the original contribution remains an excess, and you may face penalties, as well as an elevated audit risk. With that context established, let's add a short but important disclaimer. Before we proceed, please note this is educational content and not tax, legal, or investment advice. Your exact outcomes depend on your circumstances. Therefore, consult a qualified tax professional. Additionally, IRS rules and custodian procedures can change. Always verify current guidance with your advisor and your IRA custodian. With that understanding, let's clarify the core concept you must use to fix an excess: the return of excess contribution. Now let's differentiate a standard withdrawal from a return of excess contribution. A standard withdrawal simply removes dollars from the account. However, it does not erase the original contribution in the eyes of the IRS. In contrast, a return of excess contribution retroactively nullifies the contribution as if it never happened. The custodian calculates net income attributable to that excess using a standard formula. Then, the distribution includes both the excess principal and any related earnings. The custodian will eventually issue a Form 1099-R with the appropriate codes. With that foundation, let's visualize the process flow between you, your custodian, and the IRS. This sequence diagram shows the interactions. First, the investor initiates a return of excess contribution request with the custodian. Next, the custodian computes the net income attributable to the excess. Then, the custodian distributes both the excess principal and the associated earnings. Following that, the custodian issues Form 1099-R using the appropriate distribution codes and year attribution rules. Meanwhile, the investor reports any taxable earnings in the correct year on the tax return and files any additional forms, such as Form 5329 if the excise tax applies. Ultimately, the IRS receives both the 1099-R and the tax return, ensuring that the reporting ties out. With roles clarified, let's address the tricky small leftover amounts. Small earnings, such as $10 of dividends, still trace back to the original excess contribution. Therefore, do not ignore them. Instead, ask your custodian to remove those residual earnings as part of the return of excess contribution process. These earnings are taxable in the year the excess contribution was made. If you are under age 59.5, the earnings portion may be subject to the 10% early withdrawal penalty unless an exception applies. With the timing laid out, next we will summarize deadlines, codes, and common penalties in one place. This table condenses key logistics. First, fix the excess by the tax filing deadline, including extensions, to avoid the 6% excise tax. Otherwise, Form 5329 may be required. Second, any residual earnings are taxable in the year of the contribution and can be subject to the 10% early withdrawal penalty if you are under age 59.5. Third, when an ROE is corrected in the same calendar year, the 1099-R is typically coded for current year taxation, often with codes J+8 for a Roth IRA, though you should always verify with your custodian. Fourth, when the ROE is corrected in the next calendar year, but still by the filing deadline, the custodian issues the 1099-R in that next year, while the taxable year remains the contribution year. For Roth IRAs, this is often reflected as codes J+P. Again, verify with your custodian. Finally, avoid closing the account. Keep it open to support future backdoor Roth planning. Next, let's walk through an actionable, step-by-step cleanup. Here are the steps. First, confirm that your modified adjusted gross income truly exceeded the Roth IRA limits for that tax year. Next, call your custodian and explicitly request a return of excess contribution. Provide the year of the excess, the dollar amount, and make sure they include any earnings calculated under the net income attributable formula. Then, allow the custodian to compute the earnings figure. After that, the custodian will distribute both the excess principal and the earnings. Save all confirmations and expect a Form 1099-R to arrive the following January. Subsequently, report the earnings as taxable in the year of the contribution and include Form 5329 if the 6% excise or other penalties apply. If you are past the deadline, calculate the excise tax for each year the excess remained and correct it by removal or recharacterization. Now that you know how to fix it, let's contrast a standard withdrawal with a proper return of excess. On the left, a regular withdrawal merely removes money from the account but does not erase the original contribution. This leaves earnings tied to the excess unresolved and heightens audit and penalty risk. On the right, a return of excess contribution retroactively nullifies the contribution, removes both the excess principal and allocable earnings, and triggers appropriate 1099-R reporting. This process reduces penalties and audit exposure. With the distinction clear, let's test your understanding with a quick quiz. Question: you discover your Roth IRA contribution exceeded the income limit. What should you request from your custodian to properly fix it? Options: a standard withdrawal, a return of excess contribution, a Roth recharacterization to traditional after the deadline without earnings, to close the IRA entirely. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is a return of excess contribution. It retroactively nullifies the excess contribution and removes both the excess principal and the earnings attributable to that excess, which aligns with the IRS process and minimizes penalties. Looking ahead, rather than closing your IRA, you can plan for the backdoor Roth. You first contribute to a non-deductible traditional IRA and then promptly convert that balance to a Roth IRA. Be sure to file Form 8606 to track your after-tax basis. Watch out for the pro rata rule, which aggregates balances across your traditional, SEP, and simple IRAs when determining the taxable portion of a conversion. If you have substantial pre-tax IRA money, consider rolling those funds into an employer 401k plan to isolate the after-tax basis before converting. With strategy in mind, let's visualize how the dollars break down in a typical excess removal. This pie chart illustrates the distribution from a removal of an excess contribution. The largest slice is the excess principal, for example $6,500, while a small slice represents earnings, such as $100. Although the earnings may be small, they are still taxable in the contribution year and potentially subject to early distribution penalties if under age 59.5. Therefore, they must be included in the return of excess process. Next, let's include a practical script you can use when contacting your custodian. To streamline your call, consider this script. State that you need a return of excess contribution for your Roth IRA. Provide the tax year of the excess, the amount, and a request to include all net income attributable. Emphasize that it must not be processed as a standard withdrawal. Ask them to confirm the distribution codes that will appear on Form 1099-R and clarify which tax year the earnings apply to. Finally, request written confirmation of the ROE, including the earnings calculation and dates. As an additional safeguard, ask them to confirm the calculation method and the exact codes in writing. With practical tools in hand, let's reinforce the key points. The essential points are as follows. Request a return of excess contribution, not a standard withdrawal. Ensure the distribution includes both excess principal and the allocable earnings. Report those earnings in the contribution year and be mindful of the 10% early distribution penalty when applicable. Meet the tax filing deadline, including extensions, to avoid the 6% excise tax. Finally, keep the IRA open to facilitate a backdoor Roth strategy in the future. Before we close, let's quickly summarize your next steps. To recap, verify that you are ineligible and confirm the excess amount. Then, request a return of excess contribution from your custodian, and ensure earnings are included. Track the paperwork and report correctly when the 1099-R arrives, adding Form 5329 if needed. If you are late, compute the 6% excise tax for each year the excess remained, and then remove or recharacterize. Finally, keep the IRA open and plan for a backdoor Roth to maintain access to tax-advantaged growth. As we wrap up, here is one more visual to cement the timeline and responsibilities. This final timeline diagram traces the journey. On day 0, the excess contribution occurs. Soon after discovery, you request a return of excess contribution. The custodian then computes the net income attributable and distributes the excess plus earnings. By the tax filing deadline, the correction should be complete. The following January, you receive Form 1099-R. On your tax return, you report the earnings in the contribution year and address any penalties or exceptions. In the subsequent year, you can implement the backdoor Roth strategy. With everything mapped out, let's close. Thank you for watching. If this video helped you avoid penalties or clarified the process, please like the video, share it with a friend, and subscribe for more. Leave a comment with your questions, or suggest what part of the return of excess or backdoor Roth process you would like us to cover in more detail.